You're increasing your stake to 75% in your Chinese operations. It's a big bet on the Chinese market in an interesting time when sales overall in China are starting to slow, and of course we've got the trade tensions. What convinces you that this is the right time to make this move?
There's trust in the development of the China automotive market, especially in the premium segment for the long term. But we had a success story in the past. We're celebrating today 15 years of BBA. We created 18,000 jobs during that time. We have a capacity here in the factory of 520,000 vehicles. It has been a trusted partnership for many, many years. And today we said we're expanding it to 650,000 cars a year capacity, another 5,000 jobs coming after 2020. And this is depending on the trust and the development of the market. And in the premium segment, there is still a new middle class coming who would like to buy cars, and we will see further growth. If you look at the last month, on the months before, we had a 2-digit growth in China. It can be always volatile, but this is still a significant number.
Does it set you on the path to full ownership, 100% at some point in the future, or will you always need that Chinese partner?
I think it's the right way strategically to always have a partner in China, to know better the country, to develop the things together, and I see it as a long-term partnership, even if we have the majority of the stake now. But a partnership is the basis for our success.
And you're the first foreign automaker to get this majority share. There's obviously the corporate strategy that's been at play, but also, some would say, undeniably, there's the geopolitics as well. The fact that Germany and China have a stronger relationship, the fact that the trade war is proving a catalyst for China to open its doors to European companies, German companies. Is that something that you would agree with?
No. The history of that is that China has been opening up for 40 years, and we have 40-year celebration of that policy today as well. With the speech from President Xi, there was another opening up on the 19th Party's Congress, and we could see that there is an opening up now happening, and we took the chance that this opportunity exists. We are the first company who's moving into that, but it was a long-term plan strategy based on the opening up on stable framework we have found in China. So sometimes you need to develop and have the trust to use these opportunities for the future, but it's built on a trusted partnership, and it's built on a market development which we'll see will grow in the next years to come.
The price tag for the 25% was 3.6 billion euros, about 4.1 US dollars. It's about a quarter of your 2017 profits. Was it in line with expectations, or were you under pressure to pay a little bit over the odds to get that number one status?
No, it was in line with the expectations, and I think it's a good result for both sides, definitely. And you need to see it as a strong long-term strategic investment, having the majority, but on the other side, continuing the partnership with our partner Brilliance. So it's both sides.
And you're also, of course, partnering with Brilliance to spend that 3 billion euros together on an additional production facility. How do you convince investors that that is going to pay off?
I mean, if you see, we announced today the groundbreaking of the next third plant here in China, in Tiexi, which is another 3 billion euro investment for the future. How do we convince investors? I think you can see a pretty stable premium market development here. In China, it's still the biggest market in the world, and there will be new levers in the future. We will build electrified vehicles here in Tiexi. We are very flexible, 100% flexible between a combustion engine, a plug-in hybrid, or pure electric vehicles. And China is the biggest growth market for electrified vehicles. And to be competitive, you need to manufacture and assemble in the market. That's why the expansion of the capacities is a logical step in developing more electrified vehicles and selling more electrified vehicles in China.
And your counterpart at Brilliance, your Chinese partner, has said today that this decision proves that you are now focusing your investment more heavily in China than the US as a result of some of the trade tensions. You agree with that statement?
No, I don't agree with that statement, because BMW is pursuing clearly a strategy of a well-balanced distribution network in terms of sales and production network worldwide. Our plant in South Carolina is still the biggest plant in the world, and we are launching in a couple of weeks the new X7, and I will go to South Carolina to announce the launch of the new X7, which is a big SUV with a main market in the United States. And I can assure you we are continuing to invest in the United States, as this is a big and important market for us. And we continue to invest in Europe, the third pillar in our strategy. And we balance all three investments.
What proportion of the autos that you're going to be manufacturing here are going to be sold globally? You've talked about the electric vehicle segment, the iX3.
And that is not fixed and difficult to forecast. First of all, we are serving the local market, and then we will see the iX3, how much demand will be there in the world. But first of all, locally, and then we will export. But it's too early to say what is the portion of this one or this one. The only answer is we are flexible.
You've touched on this. The mass market is slowing here in China. VW, GM, they've seen slowing sales, double-digit drops, I should say. Is that starting to bleed into the premium sector? What are your forecasts for sales by end of 2018?
Yeah, for end of 2018, we still believe we are optimistic for the brand BMW, because the new X3, which we built here in this factory, is new on the market. So we deliver this new X3 for the local China market just with full supply in the next weeks. So it was ramping up, so there should be more growth in the next weeks until the end of the year as well for BMW. I mean, markets are always volatile. You don't know, and you don't know what's going on. But the premium segment on a strategic level, I'm optimistic for China, because there's societies which still would like to own premium cars, and it's the longer term. And if you look at the electrification, there's clearly a demand for that in China. So if you look at these two basic trends, I'm in general optimistic, but this doesn't mean that there can't be a couple of months or a couple of weeks where it's different. Volatility is the new normal in our business. I mean, look at Europe. Europe is also different in terms of some countries are doing well. Spain and Italy are a little bit under pressure, for example. You can see the Brexit. So volatility is our new normal, and flexibility is our best answer.
And you have to factor that into the strategy going forward?
Yes, we did.
What is your view on the US market? You've outlined some of the challenges in Europe. How is the US looking for you?
The US market is a little bit peaking at this one. It has seen the biggest peaks in the last 1.5 years. The premium segment is still slightly growing, but BMW is doing well. BMW is gaining market share and segment share. What for the US is very good for us is that we have a model offensive with all the new X products. We just introduced the new X5, the Boss, we call it. There will be the new X7 coming to the market by the end of the year. We have a new X2 in the market. The X1 is still doing well. The X4 was launched in July this year. So with all the SUVs and a much higher portion of SUVs, we believe we will gain market share. But overall, the market is under pressure in the United States.
And higher interest rates make it more of a challenge as well, presumably.
Yeah, that's true. But you need to be always a little bit conservative in these areas. But from the competitive point of view, I see a good chance for BMW, but the overall market is under pressure.
This week, the markets globally have been under pressure as investors look at what is playing out in terms of the trade war, and it's really starting to take its toll, at least on the equity markets. How do you characterize the environment as you see it now, and how does that factor into what you're going to have to take into account in terms of the hit on costs for you?
Yeah, I mean, it's volatile. And as I said, that's the new normal for us. So the one answer to this one is definitely flexibility. Take the X3 as an example. The X3 we are building in Spartanburg for the US market. We build it in China for the Chinese market. We build it in South Africa and supply to Europe. So with this arrangement, we are flexible to react to certain trade barriers. Overall, I'm a clear fan and clear driver of free trade, because free trade creates wealth, creates jobs. Spartanburg is still the biggest plant where we're exporting the majority of our production to the global network. And if there are more trade barriers coming, that has an impact. But we are, with our flexibility, with our manufacturing locations across the globe, have an answer to this one.
You flagged a cost by the end of this year of about $350 million for the BMW Group.
Pay more money for sure, because if a car is coming from the United States, is imported in China, for example, it does have an additional tariff on top of it, and it's more expensive.
And what's the cost for the group going to be in 2019 if there is no resolution?
The We will see what comes. There are still in negotiations between Europe and the US, and I hope that there is a pragmatic solution. Same story like the Brexit. There are chances, on my view, on both sides to have a conclusion, to have an outcome which satisfies both interests, and we will see that in the next weeks. But for us, be assured, we will continue to invest in the United States, and in X7 built in South Carolina for the US market will be not having any impact from any trade discussions.
Looping back, one last one on China. The electric vehicle sector here is becoming increasingly competitive. How do you characterise the competition you're facing here locally in the electric vehicle space, and what concrete steps can you take beyond the ones you've already announced today to ensure that you remain competitive?
Yeah, I mean, we are in a very good position. We already have the X1 plug-in hybrid here as a local product. We have a very successful 5 Series plug-in hybrid for the local market. So we are selling those 2 cars already. The next step will be the electric X3, which is locally produced for the local market. And I can assure you and tell you there's more to come, more electrified vehicles being locally assembled here in China. And then we are well prepared for the Chinese market or even for export.
And China becomes obviously the number one market. It is already the number one market for you, but it also becomes a major manufacturing hub for you.
Yeah, it will be major manufacturing. But if you see at today's network, we have major plants in Europe. We have a huge plant in Spartanburg, South Carolina, where we will further invest with additional products coming. So we will balance all 3 regions, and I think that's the strategy you need to have to balance all these things which are going on trade, that you have a deep and good manufacturing location in each of these 3 pillars.